Hello traders, Cousin Vinny coming to you from theclosingprint.com on July the 14th, 2019. In this edition of your weekend video newsletter, we'll discuss the areas in the markets where strength has been showing up. Looking for IWM to push a bit higher this week. It is a laggard. And we saw the Nikkei, the Hang Seng, and the Bombay Stock Exchange all close lower last week. Most of the big cap tech names moved higher with the exception of Netflix and Apple. We saw big moves in Tesla, Intel, Nvidia, and Amazon, along with Facebook. The bond stock ratio is short-term bullish, long-term neutral. HYG and junk are neutral, slightly higher, but did dip a little bit last week. The Dow Composite is bullish. It broke out last week, plus 1%. And the S&P 1500 remains on a buy signal, trending. Most of the signals are bullish, with fear indicators all moving lower. Gold is continuing to consolidate in a range for the last couple of weeks after some nice gains. As the US dollar moves lower, the copper is at a double bottom and trying to push higher. The standout last week was West Texas and Brent crude, both moving above their 20-period moving averages. That's bullish for crude and for equities if that continues. The heat map is neutral to bullish. The international markets are looking better. We'll look at some IBD 50 names that are showing relative strength. Many of them broke higher last week or are trending or happen to be pushing off the 20-day moving average. We'll also look at some candidates that showed up in the MarketSmith relative strength scan and some squeeze candidates in addition to stocks that were already trading. Volkowski is showing 505 green with a CPI signal green since the beginning of June, moving from 73.1% to 79.2% last week. That's bullish, not yet extreme, with 11 bearish patterns, 42 bullish patterns, 277 patterns waiting for breakout. SPY Weekly followed through last week. RSI remains above 50 and rising with volume equal to the previous week, and MACD is above its signal line and rising. The bulls are in control. As the spiders rise for the past 4 days, we broke out to all-time highs, of course. Junk bonds are flat to slightly bullish, so we're a little bit neutral there. We'll keep an eye on junk bonds this week. New York Stock Exchange advanced to climb is rising at new highs. In addition, I might mention that all of our breadth indicators are bullish and rising. And the expected move for the week is $3.26 plus or minus. So that gives us a target of 302.92 upside and 297.38 on the downside. So we'd have to pull back into this range right in here, previous breakout level. The NASDAQ 100 outperformed last week, so we'll look for follow through in that index. We'd be looking for big cap tech names to continue to move higher as bank earnings start this week, and we have Microsoft on deck. We'll look for a similar follow through if strength persists in those names. RSI continues to rise, volume looks good, and MACD is above its signal line and rising. Semiconductors were strong, following through after the bounce on Tuesday off the 20-day bullish and ascending moving average. RSI continues to rise. Look for continuation in chips. We might see some resistance at this previous pivot. Same thing was showing on Nvidia. So we'd expect to see Nvidia potentially test this pivot high as well. Xilinx was another name in this group that did quite well last week. We have a position in this one as well. Following through off the 20-day moving average, RSI rising, and volume looking decent. So we'll look for big cap tech to continue their performance. with the caveat that banks could set the mood with Citigroup reporting tomorrow and JP Morgan on Tuesday before the opening bell. With respect to small caps, we're still looking for a breakout. We did take some calls late Friday, looking for a follow through. We got buyers to step up intraday, pushing the close back into the upper half of the daily range. RSI is above 50. Volume was red on Friday because we didn't get back above the opening level. MACD is above its signal line, however, so we're looking for that momentum to carry us forward in IWM and for those calls to profit this week, with an expected move on the upside of 158.28 or 153.94 on the downside. Expected move for the week is $2.17. Our inverted VIX signal is still green, so we want to be long on the 60-minute time frame if that continues. As price action continues to put in higher highs and higher lows, RSI on the 60-minute time frame continues to rise, while the daily VIX continues to drop. Headed for the April lows. I wouldn't be too concerned if it does get down here. It's just showing complacency in the markets. We're more interested in price action at the present time. Fear doesn't seem to be an issue, especially if you look 3 months out, which we do with VIX VXV, the front month to the 3-month volatility index. This measure or ratio continues to drop. We wouldn't get concerned until it gets way back down here at 0.80, which is what we saw back in September and October. The markets might start to get overheated between here and there, so we'll watch price action to dictate our risk appetite. As far as breadth is concerned, NAMO and NYMO both continue to move higher. NYMO looks really strong as well. Tapered off a little bit last week. It's not the most accurate breadth indicator out there, mainly because both the New York Stock Exchange and the NASDAQ have quite a few suspect listings according to stock charts and according to NASDAQ.com. The NYSE has over 700 non-stock listings, funds, preferreds, and trusts, while the NASDAQ has over 600 stock listings with a market cap of less than 50 million. That's a tiny market cap, so that's why we tend to use more accurate measures of breadth when we look at potential moves in the markets. One of the ways to do that is with advanced decline percent. In this case, the S&P 500 price action rising line chart. The S&P advanced decline percent. This is purely just the stocks in the S&P 500, the S&P mid cap, the S&P small cap, and the NASDAQ 100. All of these are pointing higher this week. In addition, we can use the cumulative advanced decline percent in the upper panel and the advanced decline percent in the lower panel with S&P in the middle. All of these are rising, indicating that more stocks are participating in this current rally. We can also add into the S&P 500 the mid-cap 400 and the small-cap 600 stocks. The green line is that cumulative average. As it rises and stays green, we're on a bullish signal as more stocks participate in the current rally. We also have the histogram, which is a confirmation signal, while the S&P 1500 broke out last week. New York Stock Exchange high-low, same issue with this one with regard to having these additional funds, preferreds, and trusts in the New York Stock Exchange as a whole. The 3,000 stocks include funds, preferreds, and trusts. Regardless, we have more new highs than new lows. This stays above the zero line and rising. The moving average is rising. This is an indicator that we've used for years that continues to point us in the right direction when the markets start to weaken or to strengthen like they are now. You will also note that indexes like the Dow Jones Industrials, only 30 stocks, remember, but it's breaking out above volume by price. There's no overhead supply at these levels. More importantly, during this sideways price action, the rate of change slowed dramatically, so the Kopach oscillator moved lower. But note that this is starting to hook now. We're well off of the extremes, and have potential for this to turn higher and start rising for several weeks before hitting an extreme level once again. Wilshire 5000, similar idea here is once we started moving sideways, we came back to the moving average, which is bullish. Price action resumed its uptrend. RSI is rising. All the while, the Copac cycle managed to taper off a little bit and now is starting to cycle up as we begin this move into an area of no overhead supply. 5,000 stocks, a broad measure of market participation. And if we look at the weekly time frame, same idea. RSI is rising in the upper panel as we break out to all-time highs. Note Copac cycle. This gave us a good warning signal back here in April, late April, when it started to turn at extremes. So we were able to take profits into strength when that was happening. Members were alerted to this fact. The dip was bought, and the cycle now on the weekly time frame is starting to strengthen our position on the daily. In addition, the total put-call ratio did dip 2 weeks ago. We managed to move higher. We are at 0.90 at the close, so that's just telling you there's slightly more calls being bought than puts. Look for this indicator to start moving higher at some point if any fear enters into the market. Also keep an eye on skew, which is showing that institutions aren't hedging, though we are starting to pick up a little bit as volatility remains low. We announced our intention to start rebalancing our portfolio if we saw AGG, TLT, IEF, and SHY all moving lower in the short term. We started to see that, so 2 weeks ago we started to peel some of this profit off the table. We saw the 7-10-year Treasury bond also moving lower. Yields are starting to move higher, as you know. The 1 and 3-year Treasury bond ETF also pulled back, as well as TLT on the 20-year. The 5-year Treasury yield is moving higher, as well as the 2s, the green, and the 10s, the red, with the blue, the 3-month that everyone seems to be focused on, starting to cross paths with the 10-year. So we'll look for this to continue higher. This is bullish for equities, while the spread between the 2 and 10 is starting to rise. That's bullish for equities as well, while the bond stock ratio between the 10-year and the S&P 500 continues to drop, also showing a bullish bias at the current time as equities are favored over bonds. In addition, a couple of weeks ago, the US dollar rebounded, retested the 50-period moving average, and then lost it, pushed down through the 200-day. Doing the same thing now, but closed on the 200-day on Friday. So if the US dollar does continue to move lower, look for commodities to move higher like gold, which has been consolidating the recent gains over the last 3 weeks, holding the 9-period EMA. The 20 EMA is just below. That held prices as well. Look for a rebound and a follow-through as volume starts to taper off a little bit in this flag. That's the best case scenario. We want to see MACD turn as a function of price. On a breakout, MACD would turn with price, of course. As that happens, we also see stocks like CCJ, Chemico, continues to push higher off of its 20-period moving average. Look like it's going to follow through. Materials and non-ferrous metals. And of course, another way to play the gold breakout is to trade Nugget, NUGT. This is a 3-time bullish ETF. Looking for a breakout and a follow through if the dollar moves lower this week. And of course, miners showing the same pattern, GDX. Finally, as far as commodities go that are positively correlated to the equity market, you have crude oil. In this case, West Texas crude pushed through the 20-period moving average. Looks like it's going to continue to move higher on the weekly time frame, as well as the daily. We pushed back above the 20-period moving average in the middle of June. The moving averages are starting to climb again. Price action firming when it moves back to the 20-day. Buyers step up. follow through, you should look for that pattern to continue. RSI is above 50 and rising. So if you're trading any of the derivatives of USO, UWT, the 3 times long ETN, or DBO, the Invesco DB oil fund, a little bit more cost effective, all of these are bullish and rising with RSI above 50 and price action above their 20-day moving averages if you're interested in trading crude oil. This weekend we also wrote an article about sectors which are performing, which are weak. You can see all 4 of these: communications, financials, technology, and consumer discretionary are all bullish above their rising 20-day, and the 20 and the 50-day crosses are bullish, showing this cycle is continuing higher. So if you're focused on new positions, look at these sectors. All depends on what happens with Citigroup, of course. It reports on Monday before the open, and JP Morgan reports on Tuesday before the open. I have a position in JP Morgan that will take off before the close on Monday. Focus on these 4. These are looking pretty good. In addition, we want to see transports moving higher, and also we saw industrials take off last week. Weakness, we saw a little bit in biotechs as well as real estate, utilities, and healthcare. Staples continues to push higher. There's a lot of stocks in that group that also looks good. So overall, sectors look pretty good going into the first week of bank earnings. In addition, international markets are all above their 20-day moving average with a few exceptions. Keep an eye on these as well. There's areas where you can invest your money outside of the U.S. that are very bullish, pulling back to the 20-day or rising above the 20-day in a bullish cycle. So just keep that in mind as we start the 3rd week of the new quarter, bank earnings, and the 3rd week of the second half. Ranked by percent gain last week or performance, you see Lulu, that was one of the sectors we pointed out is fairly strong. XRT, retail, consumer discretionary, we also saw floor and decor moving higher, that's from a previous watch list. Mortgage finance from the financial group, that's strong. Specialty retailers, Ulta, outperforming. We can see the same thing with the entertainment group, that's XLC Communications, Discovery Communications doing well. All of these should follow through for the most part, but we do have a preference, as we'll point out in a minute. As those stocks we just pointed out move higher, like Lulu for example, I don't want to chase those stocks, and neither should you. You want to be looking for stocks that are closer to the 20-day moving average, perhaps have just recently touched the 20-day moving average or came close and is rebounding a second day starting Monday. If we can see that, we might have a good opportunity. We can see with ESNT, it hit the 20-day several times. Now it's following through. RSI is above 50. Floor and decor we just mentioned. A nice test of the 20-day following through the first day. So the second day, these 2 days after this reversal hanging man candle, a follow through off of a hanging man candle has a 59% probability of following the current trend. In this case, we see that it is. RSI is rising and above 50. So this looks like a good candidate as it breaks above this pivot. The next area where you have bag holders are this gap down the top of this wick at around 48, and then you could revisit the highs at 49. Adobe, though extended from its 20-day, continues trending. It looks like this is what's going to continue to happen for Adobe. So if you're already in it, just keep moving your stops underneath the lows of the day or a bit higher intraday if you enter on an ABCD pattern. Adobe looks like it's going to continue higher into earnings as RSI has room to move higher, and ADX is showing green above red. The ADX line is climbing, telling you that the strength of this trend is increasing. If for some reason this were to pull back to the 20-day, that would be an excellent entry. I don't think that's going to happen, and it'll most likely continue higher. The same idea goes for Arista Networks. It's above the 20-day. The 9 EMA is right in there. If you if you overlay it. So keep that in mind. It is touching the 9 EMA, riding along while RSI continues to rise. ADX is turning, which is a good sign. As this is starting to develop this new trend, the trend is strengthening. If you have Atlassian team or you've been thinking about Atlassian, most likely it's going to pull back to the 20-day moving average. RSI is turned down. It's the only reason why it's not on the watch list. But if it does move down to the 20, look for a bounce and a follow through. First or second day bullish would be a good entry with a stop below the low of the day. Baozun, Chinese stock, do look for this one to hold the 52 level. We've seen wicks along this level. Looking for it to push off of here. RSI just barely pulling back as the stock moves sideways. Note volume tapered off. That's an ideal situation. If you follow William O'Neill's strategies from IBD. Cadence Design, not my favorite setup because RSI is a little bit overbought, but it looks like it's just going to continue to rise along the 9 EMA. CDW breaking out, so we won't chase it. Comcast, one that Susie took last week. We were looking for this to break higher off of this retest of the 20-day moving average. We got that on Wednesday. You have room to run, so let this stock continue higher and trail your stops. Copart was a new entry from Wednesday. We wrote about that in the weekend blog post as well. Following through, the Bollinger Bands are expanding. TTM has triggered 2 days ago, Thursday and Friday. So more than likely we'll have 6 to 8 decent days to follow. So we'll continue to follow this one along as it rises. Discover Financial, another one of those names that'll most likely continue higher. On bank earnings, if Citigroup and JP Morgan report good earnings, look for MasterCard, Square, Visa, Pays, PAYS, and other card processing, payment processing stocks to continue to move higher as this one tries to break out above 82. If it does, there's no overhead supply. There's literally no one to sell to you. No bag holders, so look for that to break out this week. Discovery, Disca in the XLC communications sector, along with Disney, Netflix, Facebook, Comcast. Stocks like this are confirming what we're seeing, that strength in the communications sector, XLC, will most likely continue. Though we wouldn't be interested in chasing this until it starts to pull back a little bit and provide a better entry. EPAM, Robert started this one on Monday, I believe, as it followed through on the breakout. Had a nice gain, looking for a little pullback now. RSI is overbought. Note the volume on the flat base breakout. Indications that institutions have been interested. ESNT, we talked about, looking for a follow through off of the test of the 20-day with RSI rising. Genpact, another stock that's tested the 20-day that'll most likely continue to move higher. RSI is rising and above 50. Hexel Corp HXL, RSI is rising. Didn't quite get back to the 20-day moving average. 20-day is very bullish. ADX is above 20. You can see the line here at 35. ADX green above ADX red. Volume is coming in. Institutions picking up shares. Most likely this one will follow through again and break out to new highs this week. Innovative Properties, watch for this one to follow through and bounce. RSI is moving lower, so it could move a bit lower. The marijuana ETF, cannabis ETF, MJ, Michael July, has been trending lower, so I'm not really interested in cannabis stocks at the present time. Just as a side note, Keysight, yet another stock that tested the 20-day, a nice little fade, bringing the Bollinger Bands inward, volatility collapsing, making a better options entry if everything else checks out. I didn't look at options for this one yet, so just take that with a grain of salt. Looking for Keysight to continue to move higher with RSI rising. Kirkland Gold, this company is very well managed. IBD wrote several articles about it. Looking for good sales and earnings on its report. Retested the 20-day this past week, rising, not really at a fast clip. If gold takes off, this is one that I'd be interested in as well, as RSI is rising and above 50, volume increasing. LPLA Financials. This one provides brokerage services and research to the brokerage industry on Wall Street. Looking for a follow through and a breakout after a retest of the 20-day on Tuesday. Lululemon, a trade that most of you were aware of on Friday. Looking for a follow through and a breakout. Under Armour also looks very good in the same genre, a little bit less expensive. You can buy quite a few more shares on Under Armour than you can on Lulu, though we expect both to break higher this week. Along with TJ Maxx, one of our recent watch list stocks that continues to outperform, came back to the 20-day and blasted off from the 53 level all the way up to 57 last week. The high of the week was 56.74. So if you're still in it, just keep moving your stops underneath the low of the day and tighten them up a bit as we move higher, as RSI is now overbought. Middle B group, MIDD, this one looks like it's going to follow through. RSI is rising. Looks like a breakout coming out of this flat base. Volume increasing. Monster Beverage, this one gets going sometimes and really starts to follow through. Watching for a bullish day on Monday, see what happens. PAGS, I know a few of you are in this stock. It continues to break higher. After this breakout from the 30 level, it's up 13.5 points now. Just keep riding this one. It looks like it's just going to keep going. Looking for PayPal to potentially pull back to the 20-day first before continuing higher. RSI is responding to price as well. And Planet Fitness, which is holding along its 20-day. Looks like it's about to do something. RSI is rising. Good entry on this one, very close to the 20-day. This is a bit flat, so the best case scenario is we move back up to this level at around 81 to 82 and then reassess once we get there. We could find resistance. So I would tighten my stop as we rise into that zone, maybe take some off. If it does break out, you can always add those back. Bank Popular, this one is based out of Puerto Rico, operating via 172 branches in Puerto Rico and U.S. Virgin Islands. Nice little cup pattern. Looks like it's going to follow through. RSI is rising. Annual sales and earnings are also increasing as the stock rises. Progressive Corp Insurance looks like it's going to continue this breakout that we saw on Friday. RSI rising above 50. A retest just recently came close. Qualsys testing the 20-day multiple times. Most likely going to break higher at some point. I don't like stocks that do this, that gyrate above and below. I want to see a clean breakout, like Twitter as an example. Consolidating in this descending wedge, finally broke out, flagged, and looks like it's going to follow through. RSI is rising now into the third week of the new quarter. Trade Desk also looks good, holding the 20-day, looking like it's going to follow through. RSI is rising. Ulta, not crazy about the pattern. It's a flat base, but if it does break out, it's probably going to go pretty quick. Measure move, take the depth of the pattern to the highs and project that on top of this for a conservative idea of where price action could go over the coming weeks, especially if earnings are good. Universal Display Corp, OLED, continues to trend higher. Looking for a follow through, a little bit overbought now, so maybe see how this pushes higher. Look for that again, a pop and a consolidation for a re-entry. Finally, we talked about Xilinx earlier, but the retest of the 20-day gave you an absolute perfect entry on the bounce. RSI has plenty of room to run. Most likely we'll retest this pivot, especially if all semiconductors are strong this week. Look for Xilinx, NVIDIA, AMD, and all the big names like Texas Instruments to continue to move higher. In addition, we have some relative strength names that showed up. If you have MarketSmith, just click the tracked screens or find the relative strength with new highs in a correction. Obviously, we didn't have a correction, but this does show the stocks that are showing relative strength. A number of these showing up. Just take a snapshot and look for them to break higher. Alley, relative strength line is climbing. It's just starting to move outside of the buy zone. So it's a little bit more risky, but if it does pull back a little bit, the company has good annual sales and earnings. IBD metrics are very strong. Looks like a follow-through with a composite rating of 99. Twitter, again, one of those relative strength names. RS line moving higher. Good annual sales and earnings. Big cup and handle. Potentially a breakout coming and a move back to the 41 zone in the short term. CDW breaking out. Still in the buy zone. Good annual sales and earnings and nice IBD metrics with earnings at the end of the month. Starbucks also following through relative strength line climbing, annual sales and earnings increasing. Decent IBD metrics. This one just refuses to pull back in the short term. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com on July the 14th, 2019 with your weekend video newsletter. I hope this helps. We'll send out a watch list later tonight around 11:30 on the East Coast, 8:30 on the West Coast. Otherwise, get outside and enjoy the day. It's beautiful out here in Northwest New Jersey. Take care, and I'll talk to you soon.